I've been trading for over 5+ years, and every single day I come into the markets drawing out the same levels. These levels that I'm about to share with you today work on a consistent basis, and I've personally made over $500,000 trading these levels. They're systematic, mechanical, and the best part is it's repeatable. So in today's video, I'm going to share with you step by step exactly how to form a daily bias off of these key levels so you guys can make money on a consistent basis. Let's get into it. Alrighty, so as you can see right here, what we're going to be talking about is the previous day's high and low strategy. This is my personal favorite strategy. You guys have heard me talk about the 5-minute opening range, the 1-minute opening range, right? Those are scalping setups, but what I'm going to be talking about is the previous day highs and lows, which is really built for taking higher time frame setups. So as you can see right here, what we have is the daily candle. So this is called your previous day's candle. And what we're going to mark out is your previous day's high. And we're going to mark out your previous day's low. And what we're going to be doing is I'm going to explain it here in a second. There's a bunch of different scenarios that we can be looking for. But essentially, what we're going to be taking trades off of is the previous day highs and lows, either the continuation above your previous day highs and lows, or we're going to be looking for the rejection of your previous day highs and lows to come back inside of the range, right? This is really context based, but I'm going to be showing you guys the different types of scenarios and when to use different scenario to your advantage. And the reason why we trade the previous day highs and low strategy is because what's resting above the previous day highs and previous day's low is what's called liquidity, right? There's liquidity resting above and below the highs and lows of these candles. And whenever we have liquidity, what we have is trading opportunities. And that's exactly what I'm about to show you guys. So as we head on to the next slide here, what we have is the daily chart or the daily candle. As you can see, what we have marked out is your previous day highs, and we also have your previous day's low. And you can see this is the 15-minute chart on the right-hand side. We can kind of drag this over, create your previous day highs once again, and your previous day's low. In this case, as you can see right here, there's going to be resting what's called, as I mentioned, liquidity. So there's going to be liquidity resting above and below these highs. And essentially what we want to be doing is looking for the rejection off of your previous day lows for a move back towards the upside, a rejection off the highs to move back inside the range, or what we're going to be looking for is continuation above your previous day highs for a push higher, or a continuation below your previous day lows for a continued push towards the downside. As you can see right here, there are a few different scenarios that we have to be looking for. There's also some different rules as well that we have to follow in order to trade this effectively. So let's go on to the different types of scenarios. So as you can see right here, we have a few different scenarios, and really there's only two different scenarios I would be looking for, right? Inside of its previous day range, or if price is outside of its previous day range. Inside of its previous day range really means that we're inside of its previous day's highs and lows. So whenever we open at 9:30, if we're inside of its previous day highs and lows, this is what's called internal liquidity. So what we'll be looking for when we're inside of previous day's range is we're going to be looking for, number one, a previous day high and low rejection. This is the number one scenario. And number two scenario is the previous day's high break and retest. This is when price is inside the range, then we break above its previous day high, retest, and we look for continuation. So this is inside of its previous day range. And the second scenario what we have is if price is trading outside of its previous day range. So let's say, for example, price is breaking outside of its previous day's range, either in the pre-market or in the after hours. This is what's going to be called outside of its previous day range. And what we're going to be looking for is, number one, continuation, which is your previous day high / previous day low retest. This one can be a retest right off the bat. This one can come back, retest it. But as long as you hold your previous day highs, right, what you like to see is that turn into support. If you are underneath your previous day lows and you retest that coming to market open, what would you like to see is your previous day low used as resistance. And then what we also have is the reversal play. So the reversal play is when price is outside of its previous day range, we get back underneath your previous day highs and lows, right? We basically reject that level, right? We don't use it as a retest, we reject, and we come back down. Most likely what we're going to fill is this gap. So we have our continuation, which usually is a potential gap and go setup. And when we have a reversal, it's usually a gap fill setup. So with this being said, now let's go on to what this looks like on a line chart. So scenario number one, we're going to talk about range. So it's a previous day high slash previous day low rejection. So what we're going to have marked out here is your previous day highs. We're also going to mark out your previous day lows. As you can see, this is the New York session and the after hours slash pre-market. All we do is consolidate. So we're inside of the previous day's range, which is your previous day's high and previous day's low. So you can see that we're inside of this range right here coming into market open. And what we're going to be looking for is really the reaction that we have off your previous day high and your previous day low, right? A very possible scenario that we're going to be looking for when we're inside of the range is the rejection off these key areas. So the first scenario, right, we come towards the upside. What we'll be looking is really the sweep of your previous day highs. And we like to see a rejection off of this key area. So I want to see price come up towards this previous day high. If we fail to break above this previous day high level and we stay heavy, what usually happens is we have a reversal in the markets. Whenever you have a reversal off your previous day highs, there is a potential that we can trade back inside of the range. And this right here can be a possible trading opportunity back inside of the range. Similar to the downside, right? What we'll have is the push down towards your previous day lows. If we fail to get underneath their previous day lows, what's going to happen is we're going to start reversing, and you can be looking for the higher low off of your previous day lows for a push back inside of the middle of the range. So you can see right here, this is a classic sweep of your previous day highs and lows, really trading inside of a range. So when price is ranging, these are usually the setups that you do want to look for. And you can see this happens in the New York session. So now let's go on to the second potential scenario. The second potential scenario is the continuation break and retest. So as before, what we're going to mark out here is your previous day highs and lows. Now, if we want to see continuation, what we like to see continuation is above the previous day highs or the previous day lows. So in this case, what we'll be looking for is the break above your previous day highs, a retest of this previous day high for continuation towards the upside. Similarly to the downside, what we'll be looking for is the break underneath your previous day lows, a retest of this level for continuation lower. This is what's called your continuation break and retest. If we're trading in between yesterday's previous day highs and lows, generally speaking, if we do break above previous day highs and we want to see continuation, we have to see a break and hold above that key area for a push back towards upside. Similarly to the downside, we like to see a break underneath, hold, and continuation lower. Now let's go on to the scenarios when price is outside of its previous range. As you can see right here, what we have is the continuation. Now the previous day high slash previous day low retest. So in this case, as you can see, what we're going to mark out is your previous day highs. We're also going to mark out is your previous day lows as well. So in this case, right, coming into market open, right, in the after hours and pre-market, we actually break outside of its previous day's high range. So if this is the case, right, we don't have to wait for the break now, since we already are breaking above its previous day's high in the pre-market. Now all we're going to be doing is looking for essentially the retest of your previous day highs. So we already broke in the pre-market. Now we're going to be looking for the retest of your previous day high for this continued push back towards the upside, right? And similarly, if we ended up breaking towards the downside in the pre-market, what we would be doing is looking for the retest coming to market open off your previous day lows for a continuation lower towards the downside. And really, this is one of my personal favorite setups, is when we break outside of its previous day's range in the pre-market, because that generally shows that we're showing some sort of relative strength or weakness in the pre-market compared to the overall indices. And that's usually when you have the best moves, is when you retest your previous day highs right off of the bat. Now let's go on to the second scenario for outside of the previous day's range. So as you can see, instead of the continuation, what we have is the reversal. So if price doesn't continue, it can only do one of two things: reverse or consolidate. And what we'll be looking for instead of continuation is the reversal. So what we have marked out here is your previous day highs. We also have marked out your previous day's low as well. And in the pre-market, as you can see, we're breaking outside of your previous day's high in the pre-market. So coming into market open, right, we like to see continuation, but if it doesn't continue and hold your previous day highs, what's going to happen is we're going to break back underneath and we're going to reverse back inside of the range. So in this case, what we're going to be looking for is the reversal setup. So a lot of the times the reversal setup happens when there's no sort of news. It's just gravitating higher for no particular reason. And what we do is sharply break back underneath your previous day highs, basically immediate retest, and we have continuation back down towards your previous day close and your gap fill. So this is also one of my favorite setups as well when we're trading in a ranging market. A lot of reversals happen instead of continuation. So this is exactly what we'd be looking for. Similar to the upside as well. If there's a gap down in the overall market, we reclaim your previous day's low. We'll be looking for the gap fill back towards the upside. So we went over the different types of scenarios when we're trading inside of the range versus trading outside of the range when it comes to using the previous day highs and lows. Now let's take a look at some rules before we head on to some charts. Some rules that we like to look for is fairly basic, right? If we're outside of the previous day's range, what we can be looking for is an opening play. And really what an opening play is a trade within the first 30 minutes. So whenever we break outside of its previous day's range, that usually indicates that price is trying to pick a direction coming into market open. So coming into market open, when we break outside of its previous day range, what we'll be looking for is the retest of your previous day highs and lows. And whenever this happens, right, we can be looking for a potential trading opportunity within the first 30 minutes. Whereas if we're inside of the range of its previous day, generally speaking, when you're inside of its previous day range, right, between its previous day high and previous day low, we're usually consolidating, especially if we're inside the range, there's no news on that day. So what we'll do is be patient and wait for a clear direction. And what I like to do is wait for the first 30 minutes to play out. So if we break outside of its previous day range, we can be looking for a trading opportunity. If we're inside of its previous day range, we'll be patient and wait for the first 30 minutes to play out before we take any trading opportunities. Another rule that I have is don't marry a bias. Whenever we're trading the previous day highs and lows, all we're doing is observing the price action around these key areas. Of course, we can use context and other things as well, but when we observe the price action around the previous day highs and lows, it gives us plenty of different opportunities that we can be looking for. And this brings me to my last statement, which is create if statements. So if price holds above previous day highs, we're going to be looking for longs. It's fairly simple. If price breaks back underneath previous day high, we're going to be looking for a short back inside the range. So it's fairly clear here. If price does this, we're going to do that. If price does that, we're going to do this, right? Essentially reacting to price. We're not going to anticipate if price is going to hold previous day highs. We're going to react to price, see the price action around those key levels. And then based off that, we're going to be looking to take opportunities for continuation or if it's going to reverse back inside of the range. So with this being said, we talked about the previous day highs and lows. We talked about the different scenarios I'll be looking for inside of the range or if price opens outside the range. We looked at this on a line chart example. Now let's really solidify this concept and look at charts in real time. And then I'll go over some live trading examples as well that I took in real time with the group. Okay, so you can see we're now on the trading view chart and I want to make it nice and easy for you guys to understand exactly why the previous day highs and lows is a key area in price. So all I'm going to be doing is just drawing out the previous day highs and lows and we'll see how price reacts around these key areas. So in this case, we're on the 15-minute chart and all we're going to be doing is marking out the area of your previous day highs and your previous day lows. And we can just mark these and drag them over. So as you can see here, as we zoom in, what we have marked out here is your previous day highs. So coming in onto this day, what you would like to see is either the break above your previous day highs for continuation or the rejection off of your previous day highs for a push back towards the downside. You can see in this case, price is inside of its previous day's range. So what you would be looking for is one of those two scenarios. Price came up right in towards your previous day highs, little bit of rejections as you can see here right off your 389, and then we end up having that push back inside the middle of the range on Tesla, right? As I mentioned, right, this can be used as a potential trading opportunity if you like trading reversals. If you extend price over, right, we can keep doing this, right? The next day, what we can draw out is your previous day highs. Drag this over, and we can also drag now your previous day's lows, drag this over as well. So really coming into this day, it's fairly similar to its previous day. We're really going to be looking for the reaction around your previous day highs and previous day lows. So you can see right off the bat, a little bit of rejections off this 388. Price comes back down towards your previous day lows. As you can see right here, not too much of a reversal kind of in place. Once it gets underneath this previous day lows level, as you can see right here, this level ends up using as support and then turns into resistance. And you can see price has that nice push all the way towards the downside, really right down in towards this key area. So if we drag this out once again, right? Keep dragging this over. In this case, what happens here is this is your previous day low, right? Your previous day high. We really want to see the reaction around the previous day low, previous day high coming into the next day. You can see we're actually breaking underneath your previous day lows. So what we're going to be doing is looking for the retest of your previous day lows coming to market open. As it broke underneath your previous day lows in the pre-market, you can see price has a nice retest coming to market open right off of your previous day lows for an opening drive play towards the downside. And right, we can keep doing this. We can keep marking out these key levels over and over again. And you'll see price is respecting these key levels very, very nicely. You can drag this over this day. We can also now mark out your previous day lows on this day. And really, as you can see, Tesla is respecting these previous day highs and lows very, very nicely. Either we're having continuation off the previous day highs or lows, or we're having rejections off those levels and coming back inside the range. All my trades are based off these higher time frame key areas. Now let's go on to some more examples and see exactly how I look to take trades around these key areas. So as you can see, we're on NVIDIA, and I just want to mention all the examples I'm about to show you, I ended up taking in real time. So these no are not in hindsight. I'll show you guys some live trading examples here in a second. But the first thing that I do is going to mark out your previous day highs. As I mentioned, I personally like to draw key areas in price, give it a little bit more room. It's not going to respect previous day highs perfectly. It's that general area that I always talk about. Similar thing towards the downside, what we can mark out is your previous day lows. So coming into market open, right, I have a few scenarios that we can look to play out in price. Number one, if we're looking to trade NVIDIA towards the upside, we'll be looking for the break above your previous day high, retest off this level for a continuation, right? Another potential scenario for the long side is the bounce all the way back at this previous low of day, and we continue back towards the upside. If we're short bias, what we're going to be looking for is the rejection off of your previous day high for this continued push back inside the middle of the range, or the break all the way underneath their previous day lows for this push towards the downside. So you can see I have a few scenarios laid out here in price, and we're just going to be waiting for price action around the previous day highs and previous day lows. So now we can go on to the lower time frame and play out the tape. As we're coming into market open here, you can see that right off the bat, price is having a nice push towards the upside. So right here within the first 5 to 10 minutes on NVIDIA, we're having a super strong push towards your previous day highs. Now what we can do is go on to the 1 minute time frame. If you go into the 1 minute time frame, right, we have our previous day highs marked out. Other key levels that we can also mark out here as well is going to be this down close candle, which is your 1 minute order block. So we can really refine this level into this whole 1 minute order block. Plus, if you go into the 5 minute chart here as well, what we also have is your 5 minute opening range. So really, if you go back onto the 1 minute time frame, price is having a super strong push towards the upside. Now we're coming back down to retest three confluences. We have your previous day's high. We also have your 1 minute order block plus your 5 minute opening range. So as you can see right here, we have three confluences on NVIDIA. So right here, you can see we have the previous day high retest. You have your 1 minute order block plus your 5 minute opening range. So this makes it a high probability setup on NVIDIA. As you can see, price has a super nice reaction right off that key area. That's actually where I went long on price, right off that 942 candle. In this case, my long position with a stop just to break underneath. And I was looking for continuation back towards the upside. What I was looking for was really a push back towards this gap fill and all the way back towards really back inside the range here on NVIDIA. So we can move this, drag it over, and now play out the tape. And you can see right there, NVIDIA had a super, super nice push right off of that previous day highs key area in combination with some more confluences as well. Also is relatively strong compared to the Qs. So now let's go on to the next day that we have on this ticker. So as you can see right here, I'm on the next day here on NVIDIA. We end up taking a nice long position off your previous day highs. And similarly to this day, what we're going to mark out now is your previous day highs and your previous day's low. So we can draw this out and we can play out the tape. So you can see right here in the previous day, we're inside of its previous day's range, but today we're breaking outside of its previous day's range in the pre-market. So in this case, you can see we're breaking outside of its previous day's range in the pre-market. So now we're trading outside of its previous day's range. So if we're trading outside of its previous day range, what are we going to be looking for? So now what we're going to be looking for on the long side is the retest off of your previous day high. So now we don't have to wait for the break. Now we can just be looking for the retest off of your previous day highs for this continued push back towards the upside. This is the number one scenario. This is my personal favorite scenario. And another scenario is we could be looking for the break back underneath your previous day highs for this push back down towards your previous day close and your gap fill as well. So now we can go on to lower time frames. I can also refine this into a key area. As I mentioned, I always like drawing out key areas instead of key levels. Now we can see how price reacts around this 121.20, which is your previous day's high. Now let's play out the tape. So you can see right there, price is now coming down in towards your previous day highs. Super nice 5-minute candle close and a super nice reaction as well. So right here on NVDA, you can see we have that super strong reaction right off of your previous day's high. You can see that the buyers are stepping in off this level. We end up breaking structure back towards the upside, reclaiming your opening candle print as well. What we like to see is now this be used as a higher low, reclaim for this continued push back towards the upside on the overall market. So if you play out tape, price comes back in towards our key area. This is where we can go look long with now a stop just a break below, and we can look to target a 1 to 2 back towards the upside. Now we can play out the tape. And you can see right there, NVIDIA had that nice push towards the upside, right off of your previous day's highs, as I talked about. And you can see the reaction around these areas are super key. If we break above in the pre-market, we can be looking for an opening play. If we're inside of its previous range, generally speaking, we're going to wait for that first 30 minutes to play out. So now let's go on to the live session that I had for this day to see exactly what I was looking at in real time. We'll see what happens within the first 10 to 15 minutes. It's going to be pretty key for Tesla. NVIDIA, this one's actually showing a lot of strength coming into market open now. Higher time frames, we're actually above your previous day's highs as well. So now since we are above your previous day highs, this is going to be your key level that we're going to be looking for retest right off the bat for a push back up towards your 123.50. So yeah, as you can see right here on NVIDIA, coming into market open, what we have is price is getting above your previous day's high. If we're above our previous day highs, now what we can be looking for is the retest off of your previous day highs for this continued push back towards the upside. So keep an eye on NVIDIA. This one's the exact level I'd like to see hold. So this one is coming back in towards your previous day highs here. This is your 121 on NVIDIA. This is your previous day highs. If it does want to hold, right, this is the exact level that we'd like to see hold. So this is basically your previous day highs. What I'll be looking for now is kind of the reaction off here. If we get some strong price action, I like to see this push back towards upside on NVIDIA. So we'll keep an eye out on this previous day high level on NVIDIA right here. I like to see the buyers start stepping in. So yeah, fairly clear game plan on NVIDIA. If you can get that nice reaction off your previous day highs, we're going to be looking for this push back up towards high of day and above. On the NVIDIAs, you could be looking at the 122s. So on NVIDIA, I'll be very much interested if it can reclaim this, and then we can use this as risk for this push back up towards your high day and above. Right? If it just stays heavy, it potentially just gonna head lower, but if it can reclaim, now you're 121.60, right? I'll be very much interested risking off the swing low for this push back towards upside. So yeah, keep an eye on NVIDIA. Once this reclaim, what I like to see is the reclaim, and then we can use this risk off your swing low, the 120s, sorry, the 122s. That's the NVIDIA. So I got some of the 122 contracts. Now my risk is going to be off this swing low. So basically, this is the reclaim, the retest of your previous high day. And now what I like to see is the reclaim of your 1 minute, which we just did. Now what I like to see is this push back up towards high day and that target above, which would be that 124. And you can also see at the exact same time, the QQQ is also holding now your 1 minute opening range as well. So what I like to see on NVIDIA is now just this flip. And I like to see this push back towards the upside. Risk would now just be basically, right, if it comes back down, but I like to see basically 84 and push back towards upside on NVIDIA. So yeah, as you can see, I just mentioned I got in on the 122 contracts. Risk for me fairly clear, break underneath this 121. Now I'm looking for this continued pushback towards the upside. With the Qs, I like to see this pushback up towards the gap fill as well. So that's what I'd like to see. This is the exact area that I like to see hold, which is basically the area that's at right now, this 122.68. Right, if it gives up this level, it's going to come back potentially down towards that 121, which is your previous day high. But what I like to see is it hold this level, which is your 122.68 for this pushback towards the upside with the overall market. So far, 122.68 is holding. Now, what I like to see is this push up towards high day now, right? With the Qs kind of consolidating, NVIDIA, the one that has relative strength. Within the next couple of minutes coming to 10 o'clock, this is the one that I want to see push towards high day now. Right now, there should be no reason that NVIDIA comes back down towards that 122.68. If it does, that probably would mean that 10 o'clock news would come in bearish and we end up dropping towards low day on the Qs. But what we should get here is that push towards that high day here now. So yeah, we should get this push here with the Qs. Let's see if we can get that push above high day here now on NVIDIA. As it hits high day here, you could be looking to take off 25. I like to see it break above, but coming into 10 o'clock, right, we do have red folder news. As it pushes up and towards this high day level, you can take 25 off, and then you could be looking for continuation towards upside. Because if you do have that 10 o'clock pop towards that gap fill, this one is going to be the leader towards the upside just due to the relative strength. Qs pop here towards that gap fill.
You can take 25 off here. We just did fill the gap, so you want to be cautious on the Qs. We want to see how this candle closes, but if you can close this candle strong on the Qs, we should have that continuation on NVIDIA. Just do the relative strength, and this one has the most relative strength.
So yeah, I just talked about the 10 o'clock pop on the Qs. Nice push towards that gap fill on the QQQ, and then NVIDIA, right? Nice push towards the upside as well. So I'm looking to take 25% off here, and I'm looking to trail the rest of my position.
Yeah, take some off on this pop right here. It just hit high day with the Qs on the gap as well, and then we can look to buy the rest of the position. But now this is your key level, so take some scales, and then this is your order block. So now this is kind of, you want to move your stop up, and you like to see NVIDIA do something like this, preferably just push towards upside. But if it comes back down, you can see this immediate retest on this name.
So yeah, game plan fairly clear. Took off 25% on the initial push. Now I'll be leaving the rest of my contracts for that next leg towards the upside on this ticker.
Now you can see nice kind of bounce back inside the range here, and then NVIDIA relative strength. Right, you can take some more off if you like. Right, 25, maybe like 50, and then 25 towards that 124. But good chance, right? Higher time frame, fairly bullish. We have 5 minute. Looking really strong, perfect retest off your previous day high, textbook, and now, right, we're going back inside this range here. 124 is your kind of top of the range here, but scale, then scale along the way. Super solid.
Yeah, as you can see right there, super solid trade on Amazon. So as you can see right there, super solid trade on NVIDIA. Nice push towards Hive Day after retesting your previous Hive Day. And then we scale along the ways. Ended up stopping out the remainder 25% of my contracts in profit, but ended up being a super solid trade on the day. Now let's go on to the next example that I have for us. So you can see we're on the Apple chart right here. And as always, what we're going to do is mark out your previous day's high. We're also going to mark out your previous day's lows as well. And coming to market open, right, we're not going to have a bias. We're going to wait for the price action around these key areas. If we're bullish, what we like to see is the break above your previous day highs, a retest of this level for a continuation higher. Another potential bull case is a break all the way down towards your previous day lows, a rejection off your previous day lows, and a push back towards the middle of the range. Another scenario for the downside is the rejection off of your previous day highs for a pushback inside the middle of the range, or the break underneath your previous day lows, retest of this level for continuations towards the downside. So now we can go into lower time frames and play out the tape on Apple. You can see price is starting to push towards your previous day highs. So what we like to see now is the reaction off of this key area. You can see so far we're showing some weakness, right? We're failing to break above your previous day highs on this name, right? You can see upper wicks right here, a lot of upper wicks right into our key area, failing to show that we can get above this 233.80. The sellers are also stepping in here as well. So now what we can expect is Apple to continue back towards the downside. So yeah, now you can see that Apple ended up gravitating towards the downside. We actually broke underneath its previous day lows. So what you like to see here on Apple, once it gravitates down towards your previous day lows, is the reaction off your previous day lows. If we're going to stay heavy, we're going to use this previous day lows as a retest for continuation lower. If you can break back above, we're just going to come back inside the range. And you can see right here, price failed to break back above your previous low of day. It ended up holding your nice 5 minute order block as well. And we had some more continuation towards the downside. If you go into the 15-minute time frame, you can see how well this price action is. That's why I love the 15-minute chart. Super solid reactions off of your previous day highs, got underneath your previous day lows, ended up using this as a retest, and we had some more continuation towards the downside. Now let's go on to the next day that we have here for Apple. So as you can see here, we're on Apple, and this was a few days later. We ended up having a lot of internal liquidity coming into this day, so we really didn't have too much of a trading opportunity. If you drag this over, all we had was a nice little reaction off of this 231.50 and ended up just kind of gravitating down towards your previous day low. So we never had any sort of reaction around the previous day highs or previous day lows. What we had was internal liquidity. But coming into this morning, what we can have marked out now is your previous day lows. We can also mark out your previous day highs as well. So coming into this day, we'll play out the tape here coming into market open. You can see we have a pretty big candle coming into market open. This happened to be with news as well. So for Apple, as you can see right here, what we have marked out is your previous day highs. We also have your previous day lows marked out as well. What we like to see, since we are inside of the range, what we like to see is the break above your previous day highs, retest of this level for a continuation towards the upside. If we're bearish, we want to see the break underneath your previous day lows for continuation lower. And we could always be inside the range, reject off of your previous day highs or reject off of your previous day lows. So based off these scenarios I have laid out, now let's wait to see what happens on Apple and wait for the price action around these key areas. So coming into market open right off the bat, you can see that Apple is pushing towards the upside. We're pushing towards your previous day highs, and we're trying to have a strong candle closure above that key area. Now we can keep playing out the tape. Price, you can see right around your previous day highs. So we're kind of consolidating around this general area. After this initial push right off the bat, we didn't seem to have any sort of reaction around your previous day highs. So we really want to wait for now, right? Either one of two things, right? The rejection off of your 130 for continuations back inside the range, or what we're going to be waiting for is the reclaim back above your previous day highs once again for this continuation back towards the upside, since we still are strong. Plus, we had some bullish news as well. So you can see right here on Apple, right, we're reclaiming back above your previous day's high, which is a key level, as you can mark out right here, your 130.58. Now we can go on to the lower time frames here on Apple. You can see that price. Try getting above your previous day highs. So you can see right here, we ended up having a nice reaction around this 940. This could have been a potential trading opportunity for continuation. I personally did not take that just based off of the overall context. But now you can see as Apple is reclaiming once again your previous day highs, what we'll be looking for is the retest off of your 130.58 for this continued push back towards the upside. So as we play out the tape here, you can see that price is having a super solid retest off of your previous day highs now. Now this is where we can look to buy with our risk just right underneath. And now what we're going to be looking for is continuation back towards the upside on the overall market on Apple, right? If we go back, we can look for some levels now. The levels that we can mark out is going to be all the way back towards this high, which was your high all the way back from February the 7th. And we can mark this out as well for a few partial targets. Now we can play out the tape here on Apple. And you can see right there, Apple ended up having a super solid push towards the upside right off of your previous day highs key area. And you can see the reaction around your previous day highs was super, super solid. You can see as soon as it had that break above, what we're looking for is the retest, either the retest right off the bat or later into the day where we end up having that reclaim. Still, these are the exact same trades. They're just at different times, but they're still the exact same thesis. Now, I'm going to show you guys the last session that I had for this day. I'm going to pop up my executions here just so you guys know that I did take this in real time. I'm going to pop up some profits here as well from all of the members that ended up taking this trade. Now let's go on to the last session and really annotate this trade that I had in real time.
That one, we'll just see what happens coming to market open. As for Apple, this one was another one that was kind of on watch around this like 227. Previous day lows plus the higher time frame key level, which is 226 in this case. We just had news on this ticker, and we're just gravitating right back up towards this previous high day. So most likely this one's just going to come right back inside the range coming to market open. So I'm only really interested in Apple now. I'm actually not too interested in like a break above your previous day highs and hold. Just do the fact that, right, earnings, news candle, whenever you have a news candle and it's not that bullish, it just went back up towards your previous day high. A lot of times what we'll do is we just come out, take out the high, and then just come all the way back towards the downside. So we'll be patient on Apple. It does seem that it's actually potentially a sell off right before, but we'll see what happens coming out to Apple.
So yeah, you can see right there coming to market open. I wasn't too interested on Apple. It was a watch just to do the fact that it did have news. The key level for me had to get above was that previous day high, but I'm not really looking for an opening play on this one since we are inside of the middle of the range. So as I mentioned, when we're inside the previous day high and previous day low range, what I'm going to do is just be patient and wait for that first 30 minutes to kind of play out.
Apple as well trying to reclaim this previous day highs. In this case, this would be the 84% roll. I'd be interested in looking for Apple. If you have a strong candle closure above this key area, looking for now would be high and above for the 84% roll in this name. If you can get a strong candle closure on Apple, I would be interested in the 84% roll on Apple off this reclaim. Yeah, Apple, I'll be looking at the 230. You can be looking at the 230s or you can be looking at the 232.5s. Almost likely you'll be looking at the 232.5s. Okay, yeah, Apple, I have some of the Apple 232.5 contracts at 182. Risk now would just be a break underneath this, the 84% roll on Apple. I'd like to see a push up now towards high of day and above on Apple.
As you can see right there, I just entered in the 232.5 contracts on Apple off the reclaim of your previous day highs. I have it at 182 a contract. Now for Apple, really with the Qs pushing higher as well, as long as now it maintains your 130.60, I expect this to push back towards the upside after reclaiming your previous day highs.
Basically now, either the retest or I'd like to see you just push up towards high day, or it can come back down for the retest. As for Apple, this is the level I'd like to see hold on this ticker, which is your 130.64 on this name. Potentially would be interested in adding more to my position if you can have a strong candle closure. Yeah, so far, super nice reaction off that key area. Now what I like to see with kind of the Qs is I like to see this push back up towards high day now on Apple.
So yeah, for Apple, now we're having a super nice reaction off of your 130.60. Now what I like to see is just this continued push back towards the upside on Apple towards high day and above.
Really, this is your candle. That's basically kind of your risk. It's just your 132. You're risking like 10 cents for a move back up towards high day.
Also mentioning the risk right there is only 10 cents on the contract.
So yeah, this is your key area on Apple. As it kind of pushes up here with the Qs, basically as it comes up towards this high of day area, this is where you want to take some off on Apple. This 132, basically 131.80 general area on Apple. On this push up, I am going to look to take off 50 and then look to kind of bar the rest of my position.
Nice push towards the upside here on Apple, basically back towards high of day. Qs, now we have some room towards the upside towards this 528 as well, which is your gap fill. Apple, very bullish, higher time frame now, reclaiming that previous high of day off that 130.64. Plus news as well. I am looking for this continuation on Apple if we can push higher on the overall market as well.
All right, yeah, it took 50% off on Apple at that high of day. Now I'll be looking to bar the rest of the position. If Qs ends up popping above high day, we'll have this nice push on Apple with continuation.
So yeah, you can see right there, Apple, we ended up having a nice push towards high of day. Now we're above high of day. As long as we maintain this retest level, I do expect this to gravitate towards upside with the overall market. As you can see right there, just fast forward it 20 minutes after Apple, super strong push towards upside. Absolutely beautiful trade on this one. Contracts ended up running over 100%. Absolutely beautiful trade. I ended up taking this yesterday. So you guys are seeing this video today. I do this every single day while sharing my screen and executions in front of hundreds of students. So I hope you guys did enjoy that video. If you did, I'd appreciate if you guys drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.